Only 2 companies today for our podcast, as most interesting results yesterday are having their analyst calls now. Machines are looking at Global Payments and On Semiconductor. Global Payments announced results on May 2, 2022. Interesting facts picked up from the call. We're delighted that Mineral Tree's momentum continued this quarter, including 60% growth in virtual card spend for the period and achieving the highest virtual card spend month in its history in March. Bookings grew in excess of 20% this quarter, and Mineral Tree successfully extended key financial institution relationships with Bank of the West and Fifth Third Bank and went live with Finance of America Companies, a large enterprise customer signed late last year. As one example, our PaaS software solutions generate revenue growth of nearly 50% in the first quarter as we continue to see great traction with our verticalized solutions, particularly in restaurant and retail, as well as across the Vital platform, which we plan to bring to key international markets including the UK, Spain and Central Europe later this year. Excluding impacts from our recent acquisitions, this is above our cycle guidance for margin expansion of 50 to 75 basis points annually. Moving to a couple of non-operating items, we expect net interest expense to be roughly $385 million and for our adjusted effective tax rate to be approximately 20% for the full year. We also continue to add new geographies through our partnership, including recently launching in Italy, Spain, Ireland, the Netherlands and Germany, and we expect to be live together in a dozen European countries by year-end and will launch 7 additional countries in Europe by early 2023. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Very quick follow-up for policy, if I don't mind, just on the margin side. What gave you the conviction to raise it by a bit this time around, and what's the cadence of it through the year? And maybe if I can just start out by just the pricing and yield environment. It seems like maybe we're getting into a little better place just with interchange adjustments. Maybe your own ability to price. Maybe software growing faster than merchant like. Could we actually see yield start to tick up in coming quarters? Can you guys talk about what you're seeing on the international side? How exactly did that perform in the first quarter relative to kind of a 2019 benchmark, if you happen to have that handy? Can you just remind us there what sort of macro trajectory is built in to track to the low end that it points and the high ends of the guides thing? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About costs, the sentiment was 66.7% negative. About growth, the sentiment was 72% positive.
On Semiconductor announced results on March 30, 2022. Interesting facts picked up from the call. So right now we're building capacity to service that demand that we already have as committed revenue from across a wide variety of geographies and customers. From the differentiation you mentioned, the 2 ways of coming at it, and where on SemiSid is actually the sweet spot in the middle where we are able to support our customers with our substrate, the vertical integration, and support our customers with the know-how that we've built over multiple decades of device and, more importantly, packaging. So all of these are both increase in the value of our products and a mixed shift more to these increases. That's 1. 2. We do have net price increases that we've talked about, that $200 million that we've exited so far, or the $32 million we've exited with 22% margin this quarter. We're also on track to close the acquisition of the 300mm fab in East Fishkill from Global Foundries at year-end. As these transitions take years to fully execute and realize, we've been building bridge inventory to ensure a consistent supply of product to our customers. By consolidating our fab footprint, we have redeployed capacity to strategic higher margin products, and over the last 12 months we have exited approximately $200 million in revenue at an average gross margin of 21%, of which $32 million occurred in the first quarter. We also continue to make progress in our fablighter strategy, rationalizing our manufacturing footprint by exiting upscale fabs, accelerating our 300mm ramp, and improving operational efficiencies, all of which will double our capacity per factory over time. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Any sort of color on the gross margin sustainability there? And do you anticipate any improvement in the shortage supply situation before the end of the year? Could you maybe give us a sense of what percentage of your sales does silicon carbide represent today? I wonder if you can remind us what the revenue level of products that you're exiting is expected to do over the next couple of quarters, and are you done with those product exits by the end of this year? You talked about the strong design pipeline, but from a revenue perspective, I know you guys have targeted this market to go out about an 11% figure going forward, but just given strong data center compute spending trends, strong 5G trying to build out activity, can you guys just give us a rough sense on how fast this part of the business is currently growing on a year-by-year basis? Going back to the China potential disruption that you talked about, Can you talk about how much of that is your facilities in China versus impact from your customers' manufacturing? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About investments, the sentiment was 60% negative. About costs, the sentiment was 66.7% negative. About growth, the sentiment was 84% positive. About outlook, the sentiment was 66.7% negative.
I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.